Thanks for tuning in, everybody. I'm Matt. He's Jacey with Empire Algorithmic Trading, and you're watching Vwapvision's Daily Stock Talk.
It's where we just analyze the market every day, just using the volume weighted average price, and that's it. So let's get to it, Matt. It's time for a little stock talk.
Woo woo!
Well, Matt, it's time for stock talk. Happy Monday, Bloody Monday. Holy shit. So much for Friday's rally, right?
Man, I feel like Mondays are becoming a trend around here where it's just like, and panic.
Yeah, I think it's almost like Donald Trump is buying puts Friday afternoon, or someone in the administration is taking advantage of
Yeah.
this because for the past month and a half, it's just been everything administration related on Monday. Well, except for DeepSeek. DeepSeek wasn't that, but it seems like tariffs, 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 and it's just pushing the market down and. It's getting ugly. However, we're getting to an oversold spot. I mean, we're down about 8.6%, 8.4%, I think, off the high, which is pretty much right where we were at when you're looking at the chart in the sell-off in July. And the difference is that was a technical sell-off, right? That was because the Bank of Japan unexpectedly raised interest rates. A ton of traders, a ton of banks, institutions were borrowing yen, selling them for dollars, and just buying U.S. stocks. And so 0% interest. All of a sudden, the loan gets called. Everybody has to sell their stocks, and it quickly rebounded, as you can see. So we're in a slightly different environment now. It's not so technical. This is a fundamental issue, right? We've got serious growth concerns. A global trade war is in the making, and so it's a slightly different fundamental picture. However, history does repeat itself, and we got to find a bid, right? So that's all we're looking for now. We were looking yesterday at some potential support at some lower VWAPs, but they just all got undercut today. So lows got taken out all over the place. We have a little over 200 stocks on the watch list, and over half of them sold off more than 4%.
Wow.
There were 85 stocks on the S&P 500 that sold off 4% or more. On the flip side, only three traded up more than 4%. So it's getting ugly out there, and that just kind of shows when the trend turns, which is why we follow the S&P 500 and the major indexes, because when the trend turns, it turns on everything, and everything gets carried out and it gets taken out, I should say. So that's why we just sit back, relax, and we just wait for the buyers to come back in. We wait for the sellers to do their thing. And that's pretty much where we're at. And the sellers are in control. The market got down at the open and just continued to sell off throughout the day. The S&P closed down 2.7%. The Nasdaq just getting crushed, down 4% today. Small caps down 2.5%. And mid caps down 2.1%. And I was looking kind of at a lot of the mutual funds that I like to follow as well. And the only thing that was really up today were bonds, and that's what you would expect,
Yeah.
particularly when equities are just getting crushed. That money's got to find a home somewhere, and that's always usually going to be in bonds. So fortunately, right now we're avoiding the double whammy of a bond sell-off and an equity sell-off. So that's good. That's normal. That's what we want to see. We don't want to see a repeat of 2022. I was seeing today there's a lot of reporting coming on about stagflation, right? And we've talked about that for the past week or so, maybe a little bit longer, and that is a concern. That's a real problem. So it's a precarious spot we're in right now, and it's just cash is a good place to be, particularly when we take a look at some growth stocks. It's just ugly. So Reddit, it was looking like a potential support level, some stabilization. In the last 3 days, it's just gotten wiped out. It was down 19% today. Robinhood just continues to sell off. It was down 19% today. Coinbase, it tried to break out earlier, I think, in the green zone, early mid to late January, and I think that was about right here. And it's that breakout attempt just failed, and it's just dropping like a rock. Same thing with Tesla, man. I mean, look at Tesla. I think that's down. Yeah, that's down 53% since its peak. That's a haircut, to say the
Yeah.
least. Apple, which we were looking at yesterday, is a potential support, potential leader if the market would have found its footing and continue to move higher. It was off 4.8% today. That's just a drubbing. Nvidia down another 5%. It's got a lot of work to do. DraftKings, which was looking great a couple of weeks ago, like
Yeah.
it's just ready to go. Boom! It got punched in the face. This was down 5%. Gorilla Tech, it was fighting against the trend last week. It was hitting highs after its breakout, and it sold off another 14.8% today. InnoData, which we had talked about, just finding support at its previous base, it's starting to sell off a little bit, down 13%. Interactive brokers. I mean, it's just going on and on, man.
On and on.
Down 13% today. Zeekr, this is a Chinese electric car manufacturer, battery maker, down 11% today. Palantir, big winner from
Oh,
last year, down
yeah.
10% today. Atlassian, I mean, it had a nice breakout. It was holding up okay, and it's just continued to sell off. Now, what I really want people to understand is this is always why we cut our losses, right? I mean, I had Team, for example. I bought it on that breakout right here, right? However, I sold it right here because it was just not doing what I wanted. It hit my stop loss. I got out, and I'm really glad I did,
Yeah,
right?
no
That's
kidding.
how it works. Same thing with Palantir. Our model flashed a sell signal for Palantir right here. And I remember I sent a text to you say, hey, I'm moving my money out of Palantir. And so,
Hmm.
you got to follow the market, right? Do I believe Palantir 2, 3 years from now is going to be dead in the water? I don't, but I don't know. I've seen too many good stocks that I thought would be long-term leaders just never recover, right?
Well, and that brings up a good point in our model. Our model isn't to sit and hang on to a stock and ride out the storm. Our model is to get in when the money is being made, get out when the money is switching, and then sit back and wait until money's being made again. It's we're not the long-term investor. We're not the person that's looking for dividends. We are looking to take advantage of that swing.
Yeah, yeah. Well said, Matt. Well said. That's a very good point.
Well,
And you're
and
right. It
I
is.
also want to bring up emotional trading because I love this stock. This was one of our freebie giveaways on social media where we were like, hey, check out Palantir. And then I believe this one went up almost 30% in the days following our freebie giveaway. And so I was like, yeah, it felt like we were rock stars because we saw this one coming. Our algorithm pointed it out to us. We got out, like you said, you got out when the getting out was good and we're able to take some profits on it. But emotionally, I'm tied to this one because I was so proud of this one.
right. Yeah.
Thank
Hey, I
goodness
hear
we
you.
don't trade on emotions.
Yeah. And okay, let's say you did buy into it, right? And you wrote it up, and emotionally, right now you're trapped,
Hmm.
because you gave up what was a 30-some% gain, and you let a monster gain in a short amount of time
Yep.
fade away, right? And now you're looking at a loss. You're looking at a potential loss. So emotionally, you're upset because you let a big gain, and now you don't know what to do because if you sell it, it's going to rally, and if you
Yep.
hold it, it's going to continue to sell off. So that's why it's best to have rules and have stops
Yep.
and have a plan in place so you don't get yourself in a situation like that. And that's what the
Mhm.
algorithm does. It gives us an opportunity. It gives us a clear line of demarcation. It's very consistent. It's mathematically driven. A stock does not cross our buy signal unless it's being bought. I mean, that's just the truth, right? And because
Yep.
it can't maintain that momentum above the VWAP. Otherwise, the momentum stalls out, and there's no reason to own the stock. And the reverse happens when it starts living below the VWAP. So
Yep.
that's why we built it. It's capital preservation. It's letting you know, hey, this thing's it's being bought, and it might last a month. It might last 2, 3 days. That's just it. So that's why we stick to our stop losses. That's why we have rules, and it allows us to keep our emotions in check. And so even though yeah, we didn't sell out at the high, yeah, I was personally taking some profits on the way up. I nabbed out, and I still own some of the stocks. but they're free shares, right? It's a very small position. I don't have any actual capital of my initial capital at risk. It's something I figure I can tuck away and potentially give to my son someday, right? So, that's okay. That's one of the ways I'm playing that one. But in the meantime, if it, for the most part, no, I'm out of it. I'm actually sitting in 99% cash. This is one of the very few things that I do own. So that's a very good point. Emotionally, and also we're not looking for that 3 or 4 year trend hold, right? We're just riding these waves. When the buyers are in, we're taking advantage of it, and that's what the algorithm does. But right now, there's no buyers, man. I mean, we've got. Well, I'm just going to keep running through this list because it's quite
Yeah.
impressive, really. Uh, Lazian, like we talked about, just sold off hard. HubSpot, which we had
Oof.
a breakout here. There's our sell signal there, and it's just continuing to flush out. Upstart Financial, this is a good one. The reason why I brought this up is because it was a monster winner. It went
Yeah.
from I think it's around 43 up to 130, and it's just been stuck ever since. So that's what we're talking about, right? You don't want to get in there, and the next thing you know, you have a Cisco where it still hasn't hit your high, and it's 20 years later, 25 years later. Google, I mean, Google's getting crushed. It was down 4.6% today. Even the big banks, JP Morgan, getting just absolutely slaughtered. Goldman Sachs getting crushed. Walmart still acting like a growth stock, right? It completely reversed its nice run. And speaking of reversal, I mean, look at Meta, right? It round tripped. It went on, what was it, 19 days in a row. It
It was
traded
like a
up and it's given
2 month
all that
run.
back
Yeah.
up plus some, right? So
Yeah.
it's an ugly market. And finally, Samsara, right? This was a really solid
Oh,
breakout. It did quite well for us, and then it's just fallen off a cliff. I mean,
well,
you
is that
zoom
getting
this
into
out, and
all-time
you
low territory? Oh, no, no. Okay.
no. But you zoom that out, that's a cliff, man. I mean,
Yeah.
there's no bid. It's just wholesale selling, and that's what we're seeing across the board. And that's usually that's a very bad sign. I shouldn't say usually, but that's a bad sign. Now, are we going to get a whipsaw? Very possible, right? Some of the largest rallies in history occur in bad markets. So please don't get suckered into anything. Don't just sit back and wait. There's a lot of damage done. We've got to let the dust settle. Now is not the time to get aggressive. Now is the time to protect yourself and just sit back and wait.
I think we should talk a little bit about what exactly you mean by let the dust settle. Now, one thing that I thought was one of the more fascinating is a lot of times when you see these major fluctuations like this, there's a little bit of bouncing or shaking out where players that are sick and tired of losing money, just want to sell everything, trying to get in. And you see a lot of that, like we said, around those trends. And for us, you want to make sure that that trend is going in the right direction long enough before you actually buy into it. So we are not buying the bottom. A lot of people will try to do that. That's not our strategy either. So we're a little more risk adverse than that. There's a huge risk in trying to predict a bottom or see a bottom. So again, our whole model is about getting in early enough when there's momentum, but not so early that you get shaken out right away.
Yeah, I like it. You know, my dad always said it's like, he always told me you never want to buy a stock in a downtrend. It's like trying to catch a falling knife, right? And you never know if you're going to catch the blade or if you're going to catch the handle. And I've always loved that. But the flip side to that is I was like, well, it's what we're trying to do on the long side is we're trying to catch a rocket right when it takes off, right? And so and that's what we do. We buy the stocks, we get in the cockpit, hoping that this rocket takes off. And just like NASA, just like SpaceX, sometimes they blow up, right? So you get in, and if the rocket sputters, then you just get out and you get right in the next rocket, right? Fortunately, we don't blow up and we don't die. We're able to cut our losses and maintain that capital so we can try it again. But that's the flip side, right? We're trying to catch some rockets, and sometimes they just don't launch off the pad. So and that's
Well,
okay
you can
too.
kind of
The important part is you just don't keep riding it down.
to use that analogy, when the rocket ship blows up, your stop loss is essentially your parachute. Yeah, you might get burned a little bit from the explosion, but at least you're going to have a soft landing.
Yeah, exactly. And then you're still there to get on the next rocket. So it's
Mhm.
pretty exciting. It's kind of wild. I do think today was a pretty significant break. A big volume. We're breaking the traditional 200-day moving average. We're breaking the low from November, which I felt was quite significant. And so it's going to be pretty ugly here. The question is how long this lasts. It who knows, right? So we're a couple weeks into this thing already, and like I said, we're down 8.5% about on the S&P 500. 10% is your intermediate correction, and so that's usually about when when bull markets tend to start finding some bids. If it doesn't, then it's very likely we're going to be in a protracted bear, which would not be fun when you're in it, because they wear you down and they grind you, and then so because there's a lot of people that are trapped right now. A lot of people are buying in. Not everybody practices the same risks that we do, right? And so now you have some people, a lot of people, I shouldn't say some, you have a lot of people that are staring at some losses, right? And so now that's overhead resistance that the market's going to have to fight through. But also they're gonna start wanting to sell, right? Because it's just gonna, if it doesn't come back, then they're gonna start panicking. I don't know if we're seeing any of that capitulation yet. Today was pretty ugly, but usually it's a really nasty down day, and then it just races right out. Like, you could feel it, right? Today just doesn't
Mhm.
have that feel. I mean, today was just a full on slaughter. So it very well could
Yeah.
snap. I mean, who the hell knows, right? But the overall trend is bad, right? There's plenty of slaughter on the charts. ETFs, mutual funds across the board are just getting crushed. So it's a bad market right now, and fortunately we've been saying this for some time, right? It was
Yeah.
pretty rough in December. We were starting to get some action. It was looking pretty exciting, but we were still kind of, hey, we want to see some confirmation from the mid caps. We want to see some confirmation from the small caps, and then it just turned. I mean, it just turned, and it turned hard. So
On a
uh,
dime.
that's why you got to be quick and responsive, and it could just do the same thing on the long side as well. So we're just going to wait and just that's what I mean by let the dust settle. Let the bulls and the bears sort it out. Let the market figure out where the bid's going to be, right? I don't want any part of that. I want that, like you said, we want that base to establish. We want the sellers to get worn out. We want the buyers to start coming in, and then that trend's established. And then once it clears that all-time high VWAP, then we know we've got a good trend, and that's when we're going to start wanting to participate. And so right now it's just sit back and watch and enjoy the show kind of thing.
Yep. And again, that's our strategy. There's a lot of people, if you're looking for your long-term investments and whatnot, you might want to try to find something when it's low and buy it low and sit on it for 5 years and hope it corrects. That's not what we do. That's what we're talking about. There's still people going to be trading. There's still people that are buying. There's still people that are going to be selling. The majority of them are selling right now. So we're not looking to make a profit right now. So we're sitting out. That is again our swing trade strategy. Not saying it's the best, but we have shown some pretty fantastic freaking results with our model. So please hang around, stick around, and subscribe to us over on our Patreon to see our actual daily buy and sell signals as well.
That's right. Well, thanks, Maddie, and we should expect the results from the algorithm here pretty soon. Of course, we aren't taking any action on them, but it is still good to see. And as a
Yeah.
matter of fact, we're going to talk about it in Arrow review. Our breakouts for the red zone are holding up relatively well, and we actually had a couple of breakouts today. So
All right.
there were some stocks that were swimming against the tide, and we were watching them. So pretty interesting. So for our Patreon subscribers, expect to see that on Arrow review. And for everybody else, we'll be back tomorrow for another episode of Vwapvision Daily Stock Talk.
So again, for all of you here on YouTube who are watching us, make sure to go to our Patreon, patreon.com/Empire Algorithmic Trading. Join us for those arrow reviews. Join us for some educational videos if you're trying to figure out what all of this terminology and everything means. We're going to be posting more and more educational content on there and bonus features for people as well. So make sure to subscribe now. We've actually got a little bit of a discount going for the first 1,000 subscribers. So make sure to get over there at patreon.com/Empire Algorithmic Trading. Otherwise, follow us on all social media: Facebook, Instagram, X, Blue Sky. And for more information on just who we are and what we do, Vwapvision.com. Otherwise, as always, happy trading.
Happy trading. And we'll put a link to the Patreon down in the
Yeah,
description as well. Yeah. All right. Well,
absolutely.
thanks everybody. Happy trading.
Happy trading.